Good morning, happy Friday, and welcome back to another morning live with Real Estate Mindset. It has been 5 weeks since I've been able to do a live. I have missed you guys deeply, and I've been dying to tell you that I love you. I cannot do this without you. Pretty much all of the growth on Real Estate Mindset is a direct result of you guys. So I'm so thankful for that. We have a really special show planned for you guys that will be chaptered. So I want you guys to come back. So what we're going to do today, you guys, really nervous about it actually, is this is going to be one of the first time that we start talking, and Mitch is going to lead this, start talking about like what's option trading, how does all that work. So Mitch has about a 10-minute segment to go over with you about that. We're also going to show you guys our new social media platforms that we're using. We're going to show you guys the next steps in the advocacy that we've been working on. And then we'll talk a little bit about, does abolishing property taxes actually adversely help Generation Z and not boomers like most people are thinking right now? We'll also do a market analysis. So super excited. Again, you guys, thank you for being here today. So we're going to give you guys overwhelming value. Here's where I want to start. Let me do our first timestamp right now at 1:10. And we're going to start by talking about Bitcoin. And real quick, oh my gosh, I didn't say good morning. Forgive me, you guys. Good morning. Good morning. So nice to see you, Vovo. I appreciate you. You've been slipping a little bit, Vovo. Usually, Vovo is the first person to comment on the videos. Bonkersville. It's 100% Bonkersville right now. Really appreciate you guys. Let's talk about Bitcoin. Let me move my camera over here real quick. So we're going to do a market update. And what I'm going to do is show you guys the 3 indexes. I'm going to show you metal. I'm going to show you guys Bitcoin. And we're going to look at the yields or the growth or the profit over the last week and last month. But let's start with Bitcoin, because Bitcoin is absolutely burning alive right now. It could, just depending on what happens next, liquidity squeeze, maybe it's just because it's speculation from the very beginning. I don't know. But regardless, look at in 24 hours. Just looking at the 24 hours, Bitcoin is down 8.2%. That is a lot. It's sitting at 83,785. But before I started this morning live, it was under 81,000. It was sitting at $80,760. So it has made a little bit of rebound, but this son of a gun is down, and it is down big. Let me show you guys over 1 week how much this is down. So over 1 week, Bitcoin down 11.74%. Over 1 month, it is down 22.84%. Massive hits in crypto. Let's look at XRP now. XRP over 24 hours. Man, XRP sitting at $1.93. Geez, down 8.91% in just 24 hours. Okay, let's look at the 1 week right now. Geez, 1 week down almost 15%, down 14.86% with XRP. That is insane. Over 1 month, down a little less than 20%. So down 19.77% in just 1 month. So if you invested at the highs or just 1 month ago, geez, I hope you invested with a long-term hold in mind, because if you didn't, you lost a lot of money unless you were shorting it, because they are down bad. Let's move on to the indexes, starting with the Dow Jones. Not quite open yet. Before we end this video, the market will open. But over the last 5 days and 1 month, the Dow is down 3.59% over 5 days. But the bigger thing to kind of pay attention to is what's been happening over the last month with all of the noise we hear. It is down over the last month 2.1%. So not a lot. Now, some people are saying what's happening right now is a technical correction. Right? It's just a technical correction. This is normal. Now, the S&P 500 is down in 5 days, 2.95%. Same over 1 month. You guys can see that right here, down 2.96%. Take a look at the NASDAQ. So the NASDAQ down, taking a hit as well. 5 days, 3.46%. 1 month, 3.76%. All indexes down over 1 month and over 5 days. Let's switch to metals now, and let's look at gold. How is gold doing? Okay, let me scroll down to the 5-day. Not doing too good. Not as bad as the indexes or crypto for that matter. But over 5 days, gold is down slightly, 0.2%. Over 1 month, down 1.22%. Now, I've told you guys, because the advice I'm following is Mitch's advice, and it has been doing really well for me. When I started investing in silver, I didn't spend like all my money on silver. I slowly, a little bit at a time, maybe 10 ounces a month, just a little bit at a time going into silver. And so that way, I don't have to worry about these fluctuations, and I'm doing it for a long-term hold because, quite frankly, you guys, I'm sick and tired of banks. I want to do, for me, my family, I'm not a financial advisor, but we want to debank. We're sick and tired of these banks getting filthy rich off of us. So we want our own currency, which is silver and which is gold, and it is what it is. Even though we're going to learn about options, let me show you guys silver, okay? So silver down today 1.59%, kind of holding around $50. It was down about to $48. Look, got down today this morning to about 48.17. Over 5 days, also down. It was up yesterday, but it is down over 5 days as well. So everything down over 5 days. This is down 1.79%, but it is up. So it's the only thing that's been up over 1 month out of the investments that we've been looking at. It is up 2.25%. So silver did do the best out of all the stuff that we looked at. And again, I understand I kind of got blessed and lucky when I started purchasing silver because of the huge run up immediately after. But nevertheless, I hope you guys understand what we're saying. Okay. The debasement of the dollar has pushed me into looking at metals. I'm slowly getting into metals, about 10 ounces a month, and I'm debanking as much as I can. In fact, I put my down payment that I've been saving, that's been getting chipped away at to purchase a house. I put all of that actually into silver. So thank God that I did. All right. Now, let me show you guys the VIX, because the VIX is crazy. And this is going to be to Mitch's point right here. Okay. So what you guys see is volatility. And to Mitch's point in the next segment, he's figured out ways, as has the market. Now, I hate the market. You guys know that. But still, I want to educate you. You could decide what you want to do with the knowledge. I hate it. But we're going to teach you guys how to make money in any market, because when there's volatility swings, and then Mitch is going to point this out, that's when there's time to make money. Not when things are going up and down a little bit. It's massive gyrations in the market. And you can see that in the volatility index. Well, look at when I look at the 5-day. Okay, so in 5 days, the VIX has gone up 27.48%, and in 1 month, 54%. And that's the volatility we're talking about. So in that volatility, there is ways to make money. To me, again, it's very complicated. It looks like a spider web. But if I can learn it, so can you. And that's the premise when Mitch goes into that teaching. Let's look at the repo markets, you guys, because again, everything's down. Is it just a normal correction in the market, or do we have a problem, liquidity squeeze, problems behind the scene? And the answer is yes, we have problems behind the scene. But look at the repo market. This is the overnight reverse repo market. Only $6.5 billion left in that thing. So it is drying up. When we go over to the overnight repo market right here, you guys can see this is turmoil in the financing markets. It's down to almost nothing, but it did shoot up. When was this? The end of October, to about $30 billion. So there's a lot going on here. Now, here's what I'm going to use. This is Tasty Trade right here. We'll get to that here in a minute. And when I'm looking at this, guys, I'm going to tell you, I am completely overwhelmed. When I see this right here, I don't even, do I buy something right now, Mitch? Should I click this button? I don't know what I'm doing. I don't even know what a put is barely, or a call. So I'm looking forward to the training, Mitch. I really am, and I definitely appreciate it. But before we go into Tasty Trades, I want to talk to you, man. I want to talk to you, okay? I want to talk to you about this market. The market's crazy, and so is inflation. And I think that's really what I'm learning as just a normal mom and pop. In fact, I'm less than normal. I'm more uneducated than the normal person. A lot of us expected the markets to crash and to go down. And time again, we've seen inflation or money printing pick the market back up again, or flip data once again. So, Mitch, to the best of your ability, before we go into the tasty trading, the option trading, and all that type of stuff, what do you see happening in the market? Can you kind of do a technical analysis on what you're seeing here? And can you just really kind of pin down whether or not it's possible what we're seeing here is not a market crash, but rather a technical correction? Can you kind of separate the two?
There's an interesting line by the Supreme Court Justice. I can't define porn, but I know what it is when I see it. And that is absolutely applicable to what a market crash is. You will know it when you see it. You will feel it. Are we in a technical correction? Yes. But the problem with what Travis just said is the definition of a market. So as I keep hammering, I'm trying to make the point, mom and pop are an ecosphere. They're a market. Wall Street is an ecosphere. It's a market. Certain segments and categories within Wall Street, such as financials, they're an ecosphere. They're a market. You can trade these things. So the underlying point that I'm getting at is when you look at all these elements, and this is what Travis had just hit on a few seconds ago, every chart that he just showed you, he doesn't know it, but every chart he just showed you, do you realize you can trade that? So if you have a chart that is, Travis showed you defaulting homes. He showed you defaulting car loans, defaulting banks, corn, wheat, gold, silver, NASDAQ. He just showed you a handful of those charts, XRP. You can trade every single one of those. If you understand, ignore the noise, ignore the news. You trade the chart. You don't trade the news ever. If you know that a news report is coming up, you get out of the market. The point that I'm getting at, and this is where everybody gets wound up. Well, this is happening in the market. Well, what market? Define the market. Now you get to see the picture clearly.
How would you define the market right now?
Well, NASDAQ is an index, right? And gold, as in the gold futures, that's gold futures. It's completely distinct and it does not trade in the same direction as NASDAQ. So precious metals are a segment of the market. Gold, silver, platinum, copper. You can even trade copper futures. As a sideline, I actually know somebody who has a sign on his house that says this house was bought and paid for with coffee.
How?
He traded coffee futures for a living. Yeah. So the point is, you can trade these things if you understand them. He didn't care what was happening in NASDAQ. His whole life was coffee. That's the point of this. When you understand what you're looking at, then you can trade it. And that puts you light years ahead of most financial analysts. They don't understand this. Many don't understand how to trade options. They don't understand the futures. And what we're going to attempt to do here this morning is give you just a very small taste to give you an idea of those charts that Travis just showed you, exactly that you can trade them. If you have a thesis and you understand what you're looking at, you can trade them for very little money. You don't need $200,000, $100,000 to do this. You have to start small anyway, extremely small, ridiculously small, but you have to
Mitch,
learn.
I'm going to tell, I just want to reiterate for the viewers again, it is what it is. Maybe it's a necessary evil. You guys, if I could trade all of this financial market and this chaos and the debauchery just to have a normal life again, and my definition of normal is just come home, hang out with the family, not be all stressed out, and to save just a little bit. Okay, I don't want to take over the world. I want a balanced life, right? A happy life. If you guys can, when he's going into this next segment, comment below and let me know what your idea of a great life is, because I've had to redefine that. I used to, when I was a kid and I lost everything, I thought it was like cars and clout and respect and all that type of nonsense. But I've learned through a lot of pain and disappointment, it's not about any of those things. It's really about, like, you know, Mitch and I having a relationship, you guys having a relationship and loving people. And that is the most fulfilling, real thing imaginable. But Mitch, we're going to go into the segment. All right. So I put my timestamp at 13 minutes. We're going to go into the tasty trade segment, but I'm going to throw your screen up here, Mitch. But before I do, I just wanted to reiterate to everyone, we're not financial advisors. He's not telling you how to invest. We're just having a conversation. And I also wanted to read this comment on the screen for you, Mitch. This is a really good comment. And I don't see any new comments coming up. I don't know if it's glitching, but this is from Nikki. And Nikki, thank you for the super chat the other day. But he's saying, Mitch, thank you. A couple months ago, you mentioned selling puts. So they started doing research. They were writing puts on UGL and SLV, mostly just collecting the premiums, up 10K in 2 months. Need more from you. So do you remember us talking about, like, what, you know, I vent to Mitch sometimes, like, man, I'm taking a beating out here, right? I'm really taking a beating out here. I hope that people are learning. There's proof right there, Mitch. We're making a difference in people's lives, and we don't have to charge them any money. They will listen to us. Even though the apathy is bad and it gets to us, they're learning, man. You should be proud of yourself. I'm proud of you. Thank you. Whenever you're ready, I'll shut up.
Okay, so Travis, I'm going to grab my screen because it's hard for me to see the one that you've got. So I'm going to slide mine over.
Okay.
Okay. So everybody just bear with us for 2 seconds here while I figure out how to do this. Oh, crap. There we go. My office is not set up to do this, so we're.
And Mitch, I want, just for the viewers, this is Tasty Trade. So if you guys want to kind of follow along, you should think about opening a Tasty Trade account. I opened one for free. It didn't cost me any money. So that's what we'll be using today. Go ahead, Mitch, when you're ready.
Okay. So Travis, can you see my arrow?
I can, yes.
Okay, good. So what we're going to try to do here in a very short clip is give you a different way of thinking. All those charts that Travis showed you, you can trade those charts. And I'm going to use NASDAQ from yesterday to prove to you one of the statements that we made was that the data is cooked and the data is there for manipulation purposes. But before I do that, I want to make a point. Travis has one page from me that he will post below this video. And that page has links to people like Tasty Trade and Tasty Works, Tom King and Igor Ivanovsky. These are 35-year option traders. Tasty Trade is options. Tasty Trade also has futures. They've got a pretty decent futures trading system. So you can do all of this within one ecosphere, be it Tasty Trade. If you're interested, there's a fellow who's a disciple of Al Brooks. His name is Mac, and that's with price action trading systems. That's in there as well. Every single one of those people that are on that one page will save you years of losses, financial losses. They will teach you what needs to be done. Most of the programs, everything with Tasty Trade is free. They have a brokerage. That's where they make the money. But the education, these guys are live video 8 hours a day. That's where you want to be to learn how to do options properly. Don't do anything that anybody else out there on the internet tells you. These guys are legit. They're proven. Had I have known that they existed in the beginning of my time when I started to learn this, that would have made life a hell of a lot easier. And I've got a very sophisticated system. Some of these people know what it is that I'm doing, but it's simple. On one hand, it's sophisticated because I had to re-engineer everything they did so I could understand the business model. But on the other hand, I've learned, and I'm going to go through some of those things. You shouldn't be trading, like if you're trading futures, you should not be trading more than a couple hours a day. You trade when the market is moving, when the charts are crystal clear, and then you're done. You don't give your money back that you made in the afternoon. So you made it in the morning, you don't want to give it back in the afternoon. So with that said, I want to prove something starting from yesterday. When the market opened yesterday, it was right about here. And what was yesterday all about? If you went over to Forex Factory,
Mitch,
yeah.
Real quick, this is a 20-minute outlook, correct?
I have this on 20 minutes. Good point. Thank you. So if you'll see over here on the chart, it says 20 minutes. Now, trading the chart is fractal, meaning whatever is happening within inside that 20 minutes, the shape of this chart is also happening on a 10-minute, a 5-minute, a 1-minute, and a 10-second. Everything you see happening on this chart, it doesn't matter if you trade a 5-minute. Now, don't trade 10 seconds. That'll drive you nuts. But the point of the matter is, I use those. If I could show you, I have a series of these charts, literally going from day, 15-minute, 5-minute, 1-minute, and 10-second. They're all the same. The question is, where do you want to trade within this chart? So I picked the 20-minute only because I could get it on one screen so that you could see it. So up here is 20 minutes. And you'll notice that I don't have any indicators because indicators are all lagging. They're mathematically lagging devices. Our goal as traders is to trade the chart and to catch the turning points. We want to catch the volatility, the increase in volatility, or if you're in options, the decrease in volatility. If you trade the news, you would have had your head handed to you yesterday. So before the market opened, all the news is going to be in this particular case about what was going to be happening with the employment report. And you don't know what those numbers are until they come out. So typically you get out of the way of the employment report. You get out of the way of the FOMC. You just simply don't trade. You sit on your hands. And by the way, that's a psychological issue because a lot of people can't do that. Those who lose can't sit on their hands and do nothing. Sit on your hands and do nothing is actually doing something. It's saving your money. So let's start down here at the bottom. Now, remember what I said. This is where the market opened, right here where my arrow is, okay? Let's start at the bottom before the market opened. So let's say that this is 7:30. Well, what do we have here at the bottom? This would be a turning point. You have a massive bear bar, that's the red bar, followed by this green bar. So bear bar, green bar. The green bar is a positive bar. The close is right here on this green bar. All of a sudden, that tells you, well, wait a minute, we went from negative to positive. And if you look over to the left, you'll see multiple touches at the exact same line. There's a touch here on a line. You can't see the line. I didn't put them in. But if you look at the chart, you can see one touch, two touches, three touches. And you come over here, here's the fourth touch. What it means is it's tried 4 times to go short and failed at that support. So what do we have? A bear bar and an outside bull bar. Well, an outside bull bar is a reversal bar. Why is this so good? So important. Those reversal bars happen all the time. If you sit still and do nothing, you will make money by simply trading that one bar. What you would say is, I will trade this bar. I will put my stop below this outside bull bar. So I have a stop right where my arrow is. I will enter 2 ticks above that bull bar, and I will go for 2 times the height of that bull bar because it's an outside bull bar. That's telling me the psychology of the market is wanting to go long. Well, if I want to make 2 to 1 risk reward, I would put my stop down here. I would enter here and take 2 times the height of this bar once, twice. So I'd be looking to exit out at 24,875, and I would be looking to enter the trade at roughly 24,6. So that would have given me about a 200-point profit. So I would risk 100 to make 200. That would be fine. That's good. Those are points, by the way. Every point is $2 a point in the NASDAQ. Now, this is the mini NASDAQ. So a person can trade this with very small money in the account. If I'm not mistaken, you don't need more than $2,500 in the account to trade this, and you're only going to trade one mini contract. You risk 100 to make 200 points. 200 points times $2 is $400. So let's start from the beginning right here again. Outside bull bar, your target is two times up, which would put you right about here. Okay, that's your target. Put your stop here, and then you don't touch it. The trade works or the trade doesn't work. If it doesn't work, it's not that you misread it. You took the appropriate trade. You took the outside bull bar. That's one way to look at it. That's one strategy. Another strategy, which, as I mentioned, price action trading systems, that's Mac. He's a very interesting guy because he's a one-trick pony. And his one-trick pony is, as a disciple of Al Brooks, who wrote Trading Charts Bar by Bar, he looks for what's called the failed second entry. Well, here's one push and a pullback. Here's another, so you're still in the pullback. Here's a second push. This green bar right here is what Mac trades, is a second push up. So he enters 2 ticks above this bull bar here and does the exact same trade. Aim for 2 times the height of the bull bar. Over and above that, you have a mini, what's called a Gartley channel. So some people call them Gartley, some people call them butterflies. First push up, second push, first push down, second push up, second push down. Well, there's 2 triangles side by side, which forms a mini butterfly. Typically, when you see those, you can aim for 2 times the height of the entire pattern. You're trading the pattern. What's the beauty of this? Every single entry that's made has a stop. You know your risk, and you want to aim for 2 times the height of your risk every single time. A lot of people that are on the internet don't know this, they don't teach this, and they lead people down a path to destruction because they don't teach them risk reward. If you're hitting 2 times, and let's say that you win 70% of the time, even 60% of the time, with 2 times risk reward, you're making profit virtually daily. So if you think about this, if you catch just 100 points during the day with one mini, you're up $200. If you start recognizing how to trade these charts properly, that you're looking to trade the turning points, you're looking to trade the reversal bars, you're looking to trade 2 times risk reward minimum. What makes Mac so interesting is, as a one-trick pony with one strategy, he does what's called scalp and run. So he'll scalp out the height of that bar 1 to 1, regardless whether he's using 10 contracts, 20 contracts, or 2 contracts. It doesn't matter. He'll scalp out this bar, this bull bar right here. He gets 1 time the height of that bar, he's out. His stop is still fixed. He's out, but now he's got a runner. And when that runner runs, look at what happened yesterday. And this is when the announcement came out. So all of a sudden, the market starts to run. Well, do you realize from when it opened at 24,834, by the time it started to slow down, you were at 25. So you're at 24 up to 25. So you're almost 500 points. Do you realize that in less than 40 minutes, you would be up 500, you'd be up $1,000 in less than 40 minutes. One mini. But that's not where it gets really interesting. So let's keep going here. So this is the reversal bar here, right? Because it came below this bear bar and it reversed. Now it's going to start going. So A to B, B to C. Now you're going to catch a D wave. A to B, B to C, C to D. So now we enter 2 ticks above here and look at what happens. You enter at 24/7 and it rockets straight up. This is on the news. And by the way, this is why you don't pay attention to what they're saying in the news. You trade the chart. The news is just noise. So it comes up and then all of a sudden you see first attempt to go up. You can draw a line across here. You can see as I'm climbing. First attempt bounces back. Second attempt bounces back. Third attempt bounces back. Fourth attempt, all of a sudden we've got a bull bar, a bear bar, followed by another bear bar. The psychology of the market is starting to shift. All the people on the news are saying this is wonderful. Look at this. And remember when I said in the video, wasn't this interesting? It just came in as a news announcement. I said this is complete nonsense. But in that announcement, it said, well, Americans' employment has gone up 2 million and foreign employment that live here in the United States has gone down 1.6 million. Okay. So the news made a story that has nothing to do with reality. And think of the amount of people that got induced into that article. Oh, this is great. Our employment is up 2 million people. Let's jump into the market. Watch this. Who moves the market? The banks. Big money moves the market. You and I are retail traders. We're not big enough to move this market. This is NASDAQ. This trades trillions a day. So, but watch the chart. Watch the psychology of what's going on. Big money, their job is to take your money. Your job is to ride the wave with the big money. 1, 2, 3, 4. So you've had 4 touches. Then all of a sudden, this becomes temporarily the top of the market. Here's an A to a B, and then it tries to hit it again. This is the 4th attempt to break above, and it fails. Then all of a sudden, what does it do? Well, it came back to test exactly 25,023, okay? So that's your starting point again. Why? Because your follow-up bar is another bull bar. So this becomes 0. You have first attempt to go long. Crap. First attempt to go short. Second attempt to go long. So if you're trading failed second entries, you would enter right here at 25,130. And you put your stop below that bar and you're able to ride that up to 25,250. So you're able to get roughly 100 points, 120 points from where my arrow is to the top right about here. Well, that's another $300 and you're able to do it in less than 20 minutes. One contract, one mini. But here's what's interesting. It came above right where the line is on the chart at 25,213. The market went up, but look at what happened. Here's an outside bull bar right here. This is an outside bull bar, followed by a bear bar that 2 ticked above that bar, but closed towards the lower section of the bar. Then it hit it again, but go back and count. First touch, pretend there's a line here, a diagonal line. First touch, second touch, third touch. When you see things that happen 3 times in a row, you can first touch, second touch, third touch, and a test of the third touch. That's the way that I document these things. Test of the third touch. Look at what happened. Big bear bar. So what did the market do? What did the banks do? They pushed the retail players to think this market's just going to keep on rolling. And it doesn't. The market rolls over. For whatever reason, you don't care what the reason is. Your job as a trader is to trade the chart. Outside bear bar, big rollover. Now, this is where the day gets interesting. So when you realize, I can't quite see what time that is, but okay. When you realize what's going on here, bear bar, all of a sudden these bars became 200 points tall. Then they became 300 points tall. That's in 20 minutes, 300 points. That's $600, one mini contract. So if you had ridden this from here, because you've got a runner, right? You can move your stop, you can trail your stop 2 bars behind. If you do what's called a 2-bar trailing stop, you're going to ride this thing all the way down until you get what? An outside bull bar. There's your outside bull bar. You would have picked up from top to bottom. The market was up 400. It closed down 400. That was an 800-point swing, top to bottom. 800 times 2, $1,600, one mini contract. This is trading the charts. This is what you can understand on how to follow it through. So with regard to the options, remember, options are about volatility. Volatility increases when stocks generally, not including gold, because gold volatility can go to the upside. But generally speaking, stocks and indexes, when they start doing these type of sell-offs, your volatility, i.e. the VIX, jumps dramatically. You can have a 20, 30, 40, 50% run up in a VIX in an hour when this volatility kicks up. So remember what I said, these charts are fractal. Let's look at this from a larger perspective just for a second. This is 20 minutes. If I didn't tell you that this was a 20-minute chart, or I didn't tell you this was a 5-minute chart, you could have the exact same thing on a daily chart. They're fractal. They look identical. They trade identical. It's just a question of what time period do you want to trade? Well, if you're interested in trading daily, you don't really want to look at it, but you want to enter the market at the appropriate time for an options trade, ideally, you would look for something somewhere towards the bottom, because as this volatility picked up, when you sell an option, you're trading that volatility. That's in your favor because you want volatility crush. You want the volatility to stop. You're delta neutral. You don't really care with options where that market is as long as it stays in the middle of a range. Well, what happened for the balance of the day, including the fact that the market just opened a minute ago because I heard the bell, from that time period at the close yesterday till where we are today, we're in a range. So you would have made that amount of money, say by the end of today, if you wanted to cash out the option in one day to pick up your theta decay, you would have done extraordinarily well at this point. Now, you don't do that, but the point is, had you picked this up, you would have been doing just fine on your options. You'd probably be up 60 or 70%, but that's in a day. You can do the same thing on the futures in terms of rate of return. The futures are the purest, cleanest way to trade. But if you can read a chart bar by bar, you can trade the futures, you can trade the options, you can trade options on the futures, you can trade options on the stocks. I'm not a fan of stocks for a variety of reasons, but if you want to hold a stock for a long term, let's say you're in love with Home Depot, well, you can sell Home Depot options. You can sell put spreads every time Home Depot drops down, and you're probably going to do very well. You'll probably hit 10 out of 12 trades over a 24-month cycle. So if you do 45-day cycles and you're out in 21 days and your theta decay on a daily basis is $4, you're going to do extremely well. You're probably only going to get hit. You're probably only going to lose one time in a 14-month cycle. That's not bad. Okay, that's a 90% hit rate. That's good. But you have to learn, in my humble opinion, how to read the charts. And this is where a lot of retail traders fail. They don't take the time necessary to learn to read the chart. So Al Brooks wrote 4 books, the first one of which is Trading Charts Bar by Bar. And he had such pushback, he wrote 3 more books because everybody kept saying it was too dry, it's too hard to understand. Well, they didn't apply themselves. I know that that's what they were saying. The truth of the matter is the first book was by far the best book. Yes, it's extraordinarily dry. It's extraordinarily technical. If you can get through that book, you will know more than 99% of the traders out there. And then you can pick and choose what you want to trade. I also want to make a couple more points. Trading is very personal, and certain personalities can do this and other personalities can't. Can it be taught? Yes, but you have to have the desire to learn and the desire to understand that you must trade very small. You must learn. So the best places to learn are on that piece of paper that Travis will put below. You can trade the options, the futures, the charts. You can look at the thesis, anything, any chart that Travis shows you, even on the auto industry. Doesn't matter who it is. You can trade the stocks. So if you say, well, I want to trade Ford, okay, fine, but you're not going to trade the stock Ford. You're going to trade the options. If Ford had a bad couple of weeks and it was down and you think, okay, it's probably going to stop hemorrhaging at this point, you can pick your entry point, you can pick your stop, and you can pick your theta decay, which is the money that you're collecting in advance. When you sell something, they're paying you to take that position. You just trade very small. All we wanted to do here is expose you to a different way of thinking and realize that the manipulation that's going on in the world will want you to think one way. The banks want you to think one way because it's their job as traders to take your money. You don't want to think with the public. You want to think the exact opposite. This is why I've said often that listening to Kramer on CNBC is not a good idea. Take the opposite side. And that's why you've heard me say several times on videos with Travis, yeah, I'll take the opposite side of that equation because I can trade it.
Yeah.
The idea here is to teach you an idea of what you should look for if this is something that you're interested in.
Well, Mitch, I have an idea, and that is I am interested, even though I guess it's a necessary evil, right? And I guess it's important to learn because I've already I lost so much money in the stock market back during lockdowns. I mean, it's my wife continues to remind me of that. But I think what would be really good, Mitch, and I want to get to this comment here is, and comment right now, guys, if you agree with this, type in 1. Okay, so just put in 1 if you want to see, depending on Mitch, some live trading. So maybe we could start a little earlier, see if there's anything in the charts, and we actually do a live trade to see if it's how effective it is. So maybe we could do that because I have my tasty trade thing too. So maybe we could start doing that. If you guys want us to do that, do live trading, just put 1 and we'll think about it because it is dangerous and we don't want you guys to make a mistake. And that's really, Mitch has talked to me for so long about, he's like, Travis, we got to make sure that these people understand that we're not it, right? Like we can't mentor you, but we can show you where to go to get mentoring. And Mitch can give you additional tips to change your mindset because right now mindset is vital, right? It's vital right now. So, okay, we got some 1s here. So a lot of people look at Mitch. So so you can see Mitch. Here's a 1. That's my buddy, John. Okay. So a lot of people, there's Trevor. Sup, girl? I'm going to get to your comment. I really appreciate you do it. I mean, there are people, and I don't want you guys to get us wrong here. That's not our main purpose. Our main purpose is to educate you. But our goal right now is many things, empowering mom and pop. So this would fall into empowering mom and pop. Our active goal on the ground is obviously the abolishing of property taxes and waking up mom and pop. So, really appreciate you. There's Trevor. She's like, metals is the way to go. Now, I want to pull up her comment real quick because she gave us a $10 super chat, Mitch. She's asking, and Trevor, thank you so much. I appreciate your support. And I want you guys to know, making an advocacy, you could go bankrupt. Me going on these, like the natural disasters, anytime I leave my studio, I risk going bankrupt. So when I tell you I can't do this without you, I mean it. The reason why Real Estate Mindset is doing what it's doing right now is because of you guys. So hopefully we're giving back that love to you like you guys are loving us, and I appreciate it. But their question, Mitch, Trevor's question is, and Trevor, thank you, is what is your outlook on Oracle?
See, this is part of the problem. Somebody is looking at Oracle and saying, well, it's a good company. But when you get in under the hood, just recently you found people like Michael Burry that are calling complete BS on what these companies are doing because they have a very incestuous relationship and they may very well be kiting the income between several companies, including NVIDIA. So if you have a thesis and you can trade the thesis, that's one thing. But you can't go in blind, which is the benefit of using the options. Everything that we've done, or everything that I've done since we started these videos, is based on being able to quantify a position. Well, how do you quantify something like Oracle? Well, that's easy. Look at the delta. You go to the options and you look at the delta. And if the delta is stronger to the call side, that indicates that the market believes that Oracle has room to go to the upside. If the delta is stronger to the downside in the puts, then that means that the market is looking at this saying, yeah, we believe there's more downside to the puts. You can quantify it. So I don't have positions or thesis on any stock. Frankly, I don't like stock. I like companies, but an individual stock is not to your benefit. And look at it this way. If you go to Home Depot constantly, or you go to a grocery store and that grocery store happens to be a public grocery store, you see what's going on in these stores. Why wouldn't you, if you're interested in a stock, look at something that touches your life? Now, if you're using Oracle software on a daily basis and that's part of your life, okay, fine. At least you've got a basis from which to start. But why do you want to own the stock? If the stock is going to get you a 7% return and you can get a 7% return in 3 days with an option, it's just like the stock itself isn't going to get you where you want to go. Trading the options, which has less volatility because it's baked into the options based on the delta, and you're collecting your money on a daily basis, and you can get out of the way quickly, that's good. The other thing about the stocks, you want stocks, which Oracle is. Oracle is a liquid stock. But a lot of people get into these penny stocks and think, wow, this is going to be great. I'll ride this up. Yeah, no, you won't. You're likely to get your head handed to you because they're not that liquid. When you look at the amount, so you're talking stocks that trade billions a day versus stocks that might trade 10 million a day dollars. There's no money there. You can get run over in a nanosecond and you can't get out. So there's all these little idiosyncrasies about learning how to trade. And as I said, if you've got options and you've got futures and you can do this for a couple hours a day on the futures and maybe 15, 20 minutes a day, once you understand what you're looking at on the options, you're golden. You've got a life. And even what we do internally, I've learned, and believe me, it was hard. It's not my nature. My nature is push this stuff through and I can make my will occur, which I can't. But in the beginning, that's what I thought. I could get this market to bend to my will. You can't. So I've learned over time, the less I trade, the more money there is to be made. And the guys who are pros, I mean, real pros. There's a fellow out there by the name of Lance Brightstein. He's made over $100 million doing this, but he trades just like I'm telling you, very little. He picks it, he sits, he waits, he takes a shot like a sniper sitting in the grass, and he's done.
Mm-hmm. Mm-hmm. All right, Mitch. Well, I'm going to move on to our next segment. So that 10 minutes turned into 30 minutes. I always know it, Mitch. I always know it because you will go into stuff. No, it's so important. What you're saying is so important. So again, we don't want to taint the advocacy and the work we're doing, but a lot of people want to know how to make money because it's so hard to live life right now. I hate the stock market. Mitch is specifically saying, do not listen to just make your own decisions, do your own research. But I think Mitch will, maybe next time we do a live, I'll have my Tasty account set up. We'll start doing some live trades just to give people a better idea of what's happening. We'll talk about that after this, but I want to go into the next video and we're going to move into our mortgage update. I'm going to show you guys amortization. I'm going to show you all of that. But before we do that, let's go and listen to this video right here. Oh, whoops. Where's it at? Right here. Okay. So we're going to listen to this video right here, which is going to be on a apparently hawkish October Fed meetings, which it's not really hawkish, but they're essentially alluding to the fact that they're not going to cut interest rates anymore. The market doesn't know. The market's just crazy. Anyways, you guys enjoy the video. Let me know that the audio is okay. I'm going to mute us now, Mitch.
We've got some other big breaking news from the Federal Reserve, the release of the latest minutes of their meeting. Steve Leishman joining us now live from the Fed. Steve.
Yeah, Brian, I would say hawkish minutes from that October meeting, and maybe more hawkish than the market already expected. Many at this meeting, in the October meeting, suggested it was appropriate to keep the funds rate unchanged for the rest of the year. Only several supported further cuts. These are confusing minutes with a lot of back and forth. Clearly, there was a big debate at this meeting about the October cut and about December cuts. Let me go through some of the headlines. Most were concerned that rate cuts could add to the risk of higher inflation becoming entrenched. Participants, one thing they did agree on, they generally agreed that there was upside risk to inflation that was elevated and downside risk to employment was also elevated. On the debate over the October rate cut, many were in favor of lowering the target. However, some of those could have gone either way and supported no cut. Several were against lowering the rate outright. Those in favor, they focused on downside risk to employment and inflation diminishing or being little changed. Those opposed to that rate cut said progress toward inflation had stalled, inflation had actually increased, or there was a lack of confidence in the Fed heading back to the 2% target. The Fed debated how restrictive policy was relative to the neutral rate. Some said the Fed was still restrictive even after the quarter point. Others said that they saw the economy as resilient. Financial market conditions were supportive, and there was no clear sign that the Fed was actually restrictive at all. There were obviously strong differing views about the near-term course of policy, and as I said, there was a huge debate over December, but it seemed, Brian, like most sided with not cutting rates. That's my read of the minutes, but I will tell you they were complicated, and some could come away with a less hawkish view of these minutes than I did.
Oh, hey, Mitch. Okay. So wait. I'm going to tee up. We got to go into the mortgage, but quickly though, because we're already 46 minutes. And by the way, there's some love on the screen. People were thanking you. I appreciate you very much, Mitch. Go ahead and respond to that, and I'll tee up the screen for the interest rates.
Okay. Everything he just said, I rest my case, Your Honor. Upside risk to inflation. That's a direct quote. The next quote was, several think this and several think that. Okay. Translation is, we don't know what that we're speaking about, right?
Yes.
And here's the problem. And this is exactly what I was going through at the very beginning of this. They can't define the individual segments that they're responsible for. They have not segmented out mom and pop. They have not segmented out Wall Street. They have not segmented out precious metals. They're just saying, well, could inflation do this and could inflation do that? We got 7 people on the panel and everybody's got their own opinion and nobody knows what that they're doing. So you end up, and I want to make this point, you can look it up. It's called FinViz, and they have what's called a heat map. Go and look at that heat map, and you will be shocked at how many of these companies, and type in just what happened in the last 2 weeks. How many Wall Street companies are in the red? Well, why is it that they can't figure this out? For what purpose is Steve Leisman flapping his gums and literally saying nothing? Everything he just said is of no value to you, mom and pop. It's no value to anybody on Wall Street. It's complete gibberish. Why? Because he never bothered to look at Delta. He never bothered to look at Theta on any of this. He never looked at an inflation chart and said, this is where this is. This is the trajectory currently. This is a Monte Carlo analysis on this inflation where it possibly could go. Everything he just said in that segment is complete, utter nonsense. So for what purpose does he say it? Is it to manipulate mom and pop? I don't know. But it is still nonsense either way.
Nonsense is nonsense, right?
Yep.
All right, I'm going to jump in right now. I'm going to put a 48-minute timestamp on our mortgage report. It's mortgage and a rate port. Let's start with CME Fed Watch right now. So here's CME Fed Watch. This changed drastically from the video we did yesterday, Mitch, where it was at about 40%. But next rate cut, there's 73% of the market is, okay, they're actually, okay, so this shifted a little bit. Let me just double check here. So it did shift. This is interesting. This shifted, Mitch. This has shifted a lot, actually. So yesterday, it was over 50% right here. That was saying no rate cut. Now it's only 26%. So massive change, actually. 73% of the market is now saying, okay, we're back on for a rate cut in December. Very interesting. Let me go to April real quick. So April, this is interesting too. So there are 6.8% in the market that's saying there's not even going to be a rate cut until April or even past April. So it's just flip-flop, flip-flop. But what we know, though, is when they cut the federal funds rate, usually residential mortgage rates go up. And we see that right here, guys. And this is also very interesting. This is the 10-year Treasury right here. This is tracking mortgage rates. Now, usually when this thing gets under 4%, we start seeing FHA mortgage rates under 6%. But what's very interesting is that yield and that spread has been shrinking because interest rates for FHA are already under 6%. So we already have interest rates under 6%, and this isn't under 4%. So it is changing. It's very interesting, though. It's just very incredible how this is changing. Now, here's what interest rates are today. It's going to update probably around noon today, and they're probably going to go a little bit lower. It depends what happens in the morning, but you're probably going to see this a tad bit lower. Upper left is conventional, 30-year fixed, 6.36%. That's your bread and butter. Most people think it's the go-to loan, right? And I'm going to tell you guys right now, there's, I guess, two benefits of conventional. One is a preconceived notion that you're more well qualified. So if you're selling your house, you want to know that a buyer is going to be able to close. So conventional is usually going to make it a little bit more comfortable for a seller. But the only other mathematical benefit is a mortgage insurance might go away. Everything else is a disadvantage when you compare it to FHA, because look at here, I highlighted FHA, it's under 6%. FHA right now is at 5.98%. Now, if you're shopping like I've been trying to kind of help you guys understand how to shop your mortgage, let me say it this way, because I got to be careful. If it's me and I have great credit and I know how to shop and I'm shopping the first 30 days because only the first inquiry will hurt me in that 30-day grace period on my credit, I'm going to get an interest rate probably a 0.5 point lower than what you see here. So if I'm going to get an FHA, it's probably going to be about 5.5 right now. If I'm going to get a conventional, I could probably get about 5.75. So this is just your averages right here. Understand that. And so you're going to want to shop. And here's why you want to shop to get the lowest interest rate. Your amortization schedule. This is let me actually shift this over here. I'm sorry, guys. Let me move us over here. Now, really important. I'll be very fast here. Here's your amortization schedule. Normally, before we had lockdowns, buying a house was almost a slam dunk. Okay. And that was one of the rare debts that you can get into, and you can actually become very successful getting into debt. The problem when we fast forward today is most young adults don't understand what debt is, and they are treating their mortgage, quite frankly, like a credit card. And they're, oh, when are rates going to go down 0.5 point so I can refinance? And what they do by doing that, they get a temporary relief, but they make the banks potentially hundreds of thousands of dollars, and they don't realize that they trap themselves in an amortization schedule. These things are horrible unless you pay the front-loaded interest before the loan is due. Okay, so this is a 30-year loan, $350,000 loan amount, 30 years, 5.98%. So I'm taking the lower interest rate FHA. Look it. This is why you got to be so careful. In other words, don't just blindly go purchase a house, right? The interest you pay back exceeds the principal. Okay, even at an interest rate under 6%, you pay back in interest $403,000. Now, if you want to really make a dent here, you can pay off $25,000 of your loan, and you're going to save 5 years and $100,000. If you pay your loan off early, you will make big money in the form of not paying fees. Now, this is so front loaded with interest. I want you guys to pay attention to the first year. That's the first row. First year, you're paying $20,800 in interest and only $4,300 in principal. So you pay way more in interest versus principal. And look at, guys, I highlight on the bottom here. This is how bad this is. If you're not listening to me, this is going to be you. It takes you 19 years. It's not until the 19th year where the amortization schedule flips and you start paying more principal, barely more principal than interest. You see that here? So you're now paying more principal by $124. It takes you 19 years to do that. But if you just make an optional payment every month of $250, let's see how much this saves you. It's $250. Okay, let's see. So this is so crazy, man. So if you pay $250 extra a month, I mean, you should be so proud of yourself if you do this. You turn a 30-year loan into a 22-year loan, so you don't have to refinance. You just have to be smart with your finances and smart with how you're spending your money. And look at how much interest. Let's see, where's our interest savings? Right here, $111,000. See that? Please, you guys, do it. Don't get trapped. Now, that's just looking at, so that's 100 to 200% in interest, right? When we compare it to renting. But don't forget, when we add things like property taxes and homeowners insurance and mortgage insurance, it starts to get a lot more realistic, okay? So remember, here's the original home price, $389, 10% down payment. All the stuff is the same. We just went over. Look at your property taxes, guys, okay? In 30 years in property taxes at just 1.5%, you pay back $175,000. That $175,000 you see on the screen right there is what they're stealing from us. That's against the 16th Amendment of the Constitution right there, that $175,000. That is equity stripping us. That's illegal. Property taxes are illegal, but we have to pay that. So after 30 years of paying property taxes and homeowners insurance, you guys pay back a little over $1 million to buy a $389,000 house. So don't get lost in the emotion. Don't get stuck in the emotion. Be very, very careful on how you guys do things and move forward. And the other issue is in the housing market, guys, is most of the professionals have a financial bias. And that financial bias can absolutely destroy people. So I want you guys to really focus on paying the amortization down for obvious reasons and not being drowning in debt, not being a servant to that debt. Okay, so I'm going to shift and we're going to get into the advocacy here in a second. But I'm going to shift into a video where it's going to go over existing home sales, and then we're going to go into some really cool stuff. So if you guys can, let me know that the audio is good. I'm going to mute you real quick, Mitch and myself. We're going to listen to this video right now.
Diana Olick has that for us. Diana.
Carl, existing home sales in October rose 1.2% from September to a seasonally adjusted annualized rate of 4.1 million units. That's right along expectations. Sales were up 1.7% year over year. Now, this count is based on home closings, so contracts likely signed in August and September when the average rate on the 30-year fixed mortgage came down for a bit, but as you can see, is now higher. The bigger headline here is supply, which had been gaining all year. It fell to 1.52 million units, down a little less than 1% from September, still nearly 11% higher than the year before. So it's now a 4.4 month supply, which is still considered lean. And that is why prices are still stronger. $415,200. That was the median price of a home sold in October, up 2.1% from a year ago, and the 28th consecutive month of annual gains. Homes are staying on the market longer, an average 34 days, up from 29 last year. That's the longest in 6 years. First-time buyers making a small comeback at 32% of sales, up from 27% a year ago. And sales growth continues to be on the strongest end, on the highest end of the market. Those of the $1 million plus homes up 16% year over year. Sales of homes priced between $100,000 and $250,000 flat. Carl, back to you.
All right, Diana, thank you.
I was just replying to a comment. Okay, so real quick to respond to this, and I have to go quickly because we're running out of time. So Travis, is conventional VA the only one that can exempt you from PMI? Well, okay, so let's just talk mortgage insurance because PMI is only with conventional. It's called something else with other loans as well. So yes, conventional 20% down, you don't have PMI. VA doesn't come with mortgage insurance, although they have a guarantee fee. But on USDA, so USDA has a guarantee fee, but it is so low. So also, Trevor, just throwing USDA on there, even though it kind of comes with a very tiny mortgage insurance, it's so low that I would almost say that if you get USDA, not only does it have no down payment, it also has no mortgage insurance. Okay, so I'm going to go into the next thing right now, and this is very, very important to me, and I really hope you guys are paying attention to this. This has really been my life for so long, and part of the reason why I have not been able and I have not been doing the live videos, I've been absolutely cooked fighting for people right now because all of these fights, guys, I'm learning and I'm taking notes so that I could package it up and teach you guys how to do the same thing that I'm doing to get results to take back your local government. Okay, but this is going to be an update very, very quickly on the advocacy because I want you guys to start getting familiar with this website and I want you to start using it. It doesn't cost you any money. The only thing that's going to happen by you guys going here is you guys will grow and you guys will be empowered. That's it. That's the only thing I'm asking you to do right now. And I just wanted to show you real quick. So here is my website. I will be working on this, making a lot more beautiful. It is noisy, but I want you guys to make sure you're going to the More tab on the upper right here, and you're looking at what we're doing. Okay, so I have litigation support now, criminal complaint I already issued, but where I'm at right now is I'm working on the school bonds and ISD bonds. Okay, I'm sorry, school board and ISD bonds. So this is the next thing I'm working on. I'm going bankrupt, you guys. I'm going bankrupt doing this. Because it's free. We want our entire foundation to be free and empowering the public. So I want you to come back here. Now, what we're going to do today is let me go down here. Okay, so there's all kinds of stuff here for you guys. But what I'm going to start doing, okay, we're going to move on to do a market analysis live on a property. I'm going to find a property right now, and we're going to do that. But this is where you go to learn how I'm doing this. Okay, it's this class right here, how to do a market analysis. Now, each time I do a live video and we do a market analysis, I'm going to start uploading it onto this course. In this course, if you're a realtor, 100% you got to take this course. This course is for anyone that wants to understand how to find a great deal, wedge, cash. It's so easy. I made this so easy on you guys. I hope you use it. But look at, okay, this is what the course looks like. Look at how many chapters, absolutely free for you guys. I love you. I told you, I put my actions speak louder than words. I love you. I told you that. Look at, okay, so all the way on the bottom, you can't see it because my head is in the way. I have a big head. Anyways, I'm working on that. But market analysis examples. And you guys see the first market analysis is today's date, November 21st. So if you want to come back, anytime we do a market analysis live, it's all going to be uploaded here. And that's my gift for you because I want you guys to stay engaged, especially if you're in the market trying to purchase a home, because a lot of people are giving up and they're just buying a house instead of using the math. Okay. So this is the course right here. Now I also, and this is a call to help. I'm so sorry. I'm asking so much of you guys. I really apologize. But if you go back to my homepage on YouTube, this is what I've started adding. Okay. I now have links and I got to add the Discord. Trey, if you're listening, or Austin or Nikki, if you guys are listening, please text me on Discord. Okay. Here's my social medias right here. Look, I have my website. You can click that. TikTok. I have X and I have Meta. And now what I need you guys to do is I need you to go back to my homepage. And the first thing I need you to do is I need you to go to the Meta and I need you guys to join this because I need to start making some admins here. It looks like nothing because you guys, I'm only one person. I'm trying as hard as I can to make a platform and create a mechanism for us all to be united. It does take some time. Please come here. Real Estate Mindset on Facebook. Join it. I need some moderators. Obviously, I just started this. Okay. Here's my X. Please join this as well. I've been doing this a little bit longer. Got some updates on X, not a lot of activity. And then also TikTok, look at no views, essentially no views on TikTok. Please come here. I don't know what I'm doing. I need your help. And anyways, guys, I don't know how else to say it. I mean, I desperately need your help. Like I'm desperate. I need your help because the only thing that's important to me right now, other than not going bankrupt, is making sure we can get enough people together to start rallying. So that's one of the main purposes here, as well as empowering mom and pop, is to create a mechanism so that we are connected and linked. And that way, when we work on one project, it's one project at a time. Hey, show up here. We got to rally. We got to make a difference. Here's Mitch's website. It's Mockingbird Properties. Okay, so that's his website. He has so much information. Come here as well. Now, here's the form we're going to be filling out today. So I'm going to do my intro now for the market analysis. Okay, so I'm going to add this to the market analysis course. So what we're going to do, guys, is before I start this, though, I want you guys to tell me a subdivision. Okay, so give me a subdivision. Now, Mitch, I want you to give them an update on your class action, but in the comment section, okay, I want you guys to give me a subdivision in Houston because I'm going to do this analysis live and I want to do it based on a subdivision that's in the Houston market. Okay, so if you guys can, please comment below and give me a subdivision. And if there's no subdivision, give me a city because I'm going to teach you guys exactly how to do this. Mitch, can you give the viewers an update on the class action lawsuit and the lawsuit in general, please?
The attorney in Washington is working on a layout for another website. So everybody, including Jeff Mashburn, are cleaning up the sites with the idea to make it easier for everybody to navigate to the appropriate section that would be of interest to them. And the advocacy is to repeal all property tax in favor of the uniform state sales tax. And this issue is applicable across the entirety of the United States of America. So what we are doing, the class actions will be denoted so we can help the attorneys file the class actions. The evidence that we have mounted in the last several years is irrefutable. And even the courts have agreed that fraud did occur. But the problem is they don't want the cases adjudicated. They're afraid of the evidence. And rightfully so, I get it. But the bottom line is you can't stop this because they themselves are violating the very existence of the law. So what we are doing is we will help attorneys across the United States do the class actions. We'll give them the paperwork. We'll show them what to do, how to do it. And there's so many people that want to participate in these class actions. We'll even deliver those people as prospective clients for those attorneys. That's the goal. Now, it takes an awful lot behind the scenes to make that happen, but that is what this advocacy is about. So it's several websites all pushing in the same direction to restore the balance sheet to mom and pop. That's one issue. The other issue I want to touch on just for a second when Travis just went through the idea that the market is thinking, well, it's a 73% probability that they're going to raise interest rates. Trevor, to your point, when you said about the stock, and to the point of it's not even relevant about the 73% thinking they're going to raise interest rates. If they're going to raise interest rates, that's to the benefit of nobody. Lowering interest rates benefits the Federal Reserve. However, as we saw the last time when they dropped interest rates, the 10-year Treasury ended up going up. And we said that was going to happen. When risk comes into the market, interest rates go up. So again, that's noise. But what's not noise, if you have a mortgage, and this is what Travis was showing you, and you have an amortization schedule, and you said, well, I don't know what's going to happen with the 10-year Treasury, but I think it'll trade within this bracket, and you had the capability of selling options on that 10-year Treasury through the futures, and you could make $1,000 a month just by selling the options. So instead of doing Oracle, Trevor, you said, I have a mortgage and I want to pay that mortgage down, and I want to take that profit and apply it to that mortgage. Look at how fast you could pay down that mortgage by doing everything that we're speaking about here this morning. It's just a matter of getting up to speed. Well, if you can save yourself 15 years of payments on that mortgage, now you're cooking.
All right, very good. We're going to get started right now. So I hope you guys enjoy. We're going to use Rancho Alto to do a live market analysis, and the date is November 21st. We're not going to do the cash flow because we ran out of time, but we will do the wedge. So I'm going to transfer over here real quick. Now, we already got the subdivision you guys see on the bottom left there. We had someone in the comment section wanted a review on Rancho Alto, okay? So I put Rancho Alto on the form here. This is just a one-page document. I'm telling you guys it's easy. We're going to do a one-year comp analysis. So now what I got to do is I come back here and we got to see, first of all, what has sold in the subdivision of Rancho Alto in the last year. Now, if I was buying my own house, I would go back 4 years, but I'm not buying my own house. We're just going to do this as an example. We're going to go back over the last year, and we're going to basically see what the market price per square foot is. Price per square foot is just a start. It doesn't determine value, but it really allows you to filter a lot of data to kind of see exactly what you're looking at as far as a good deal or bad deal. So there's a total of 18 homes that have sold in Rancho Alto in the last year. Let's look at the results of that. Okay. All right. So I'm going to select all of these. Okay, so every single comp, remember you guys, a comp is a sold property. I'm going to go to stats now and tabular. This is going to automatically average this out because we have to figure out averages. So let's see what it gives us here. Okay, so wow, that's brutal. That's crazy. So the average price per square foot is $2.11. That's high. That's crazy. Okay, so I have the average. So let me go back to this form now. And now that I have this, I'm almost done. Like I can literally, like, this is the most important thing on this form. With just this number, I can do a whole bunch of stuff now. All right. So let me show you. Let me go back here now. Okay. Now that I have that. Okay. Let's see what is up for sale. Now, hopefully there's stuff for sale in that area. So now what we're going to do, now that we have the market price per square foot, I'm now going to look at the active listings to see if there's potentially a deal there. Okay, so let me see the results. There's only 2. Okay, so is it anything under $2.11 a square foot? Okay, so let me organize this immediately. I could tell you, okay, so if the average price per square foot over the last year was $211, we know automatically that there are 2 properties that appear so far on the surface well under market value, actually to about 20% under market value. So the first thing I'm going to do is let's go here to this first property, and I am going to note, okay, a few things here. I'm going to note the sales price for the form, okay, which is $535. I'm going to note the subdivision. We already have that. And I'm going to note the size of the property. Okay, so the size of the property is 3,110, and the price is right here. Now, let's see if this is being overtaxed. Okay, I don't know 100% if this is being overtaxed. So let's go to the tax column real quick. Oh, okay. I cannot go to the tax column. That's interesting. It's blocked out. I don't know why. That's very bizarre. Okay, but regardless, I have $172. So I'm going to go back here. Okay. Purchase price is $535. This is very easy. The size of the property is 3,110. Okay. And all I have to do now to figure out wedge is I take the size of the property right there. Oh, I'm sorry, guys. My head is in the way. My head is always in the way. That's why I'm always trying to be loving, you know? My emotions are in the way. All right, so you take the size of the property times the market price per square foot, which is 211. So size times price per square foot market gives us 656,000. So then what we do is we subtract the purchase price right here from the market value, which gives us gross wedge of 121,000. Okay, so you could say, let me put that here, 121,000. It is literally as easy as that. But I do want to say this before okay, that's it. So we found a property within a few moments that has $121,000 in wedge or 20% in wedge right now. Now, this is what's really important, guys, and that's going to conclude. I hope you guys see how easy this is. Now, obviously, if I wanted to do the payment, I would go to a mortgage calculator and I would calculate the taxes, and then I would basically do the same thing I showed you. But let me go to this screen here. I want to say something before I go. That's today's market, right? I don't know what's going to happen. I don't know how much home prices are going to continue to go down. I don't know what the Federal Reserve is going to do to try to bail us out. I don't know what the government's going to do to try to bail us out. All I know right now, you guys, is the math. And if you're using the math, all I know is this: you're going to have way better odds of being safe. That's it. So please use the math. Don't use emotions. And I'm not even talking about your emotions, other people's emotions, like salespeople. And if you're a salesperson, you're watching this, stop selling, start offering value, start going over the math. And that, I think, is going to pretty much do it, Mitch. I didn't know when we started that. I'm going to just put it on an hour mark. And I'm going to let you guys go. I appreciate you. I love you. I hope you guys have a great Saturday. Mitch, you want to say anything before we – and normally I would do Q&A. It's just we ran out of time. So sorry about that, guys. Mitch, any parting words, sir, my friend?
Ideally, find people that you think would have an interest in getting involved in their property tax situation to solve it. And as I said, this is across the United States. This isn't just a Texas issue. The bottom line is that property tax must be repealed in favor of the uniform state sales tax, and there is no other solution but to do that. And the longer this goes, the worse the ramifications. That's just the way the math is. This has got to stop, and the sooner the better.
Very good, sir. All right, you guys, we're going to get you out of here. Once again, happy Friday. And I just, how do I want to end this? I'm going to say it like this, okay? I want you guys to do me a favor. Other than checking out the advocacy, growing with us, sharing all of this, guys, I really need your help. YouTube is definitely flipping. I'm getting closer and closer to bankruptcy, but this is what I want you to say, okay? I want you to do this, okay? I want you to say out loud, literally, as soon as I'm done here, I want you to say out loud, I am important, and I'm going to kick butt today, and I'm going to love people. Say that out loud because you need to remember how important you are. If you don't love people, then no one will. It's literally you that's watching this. That's why you're here. Love some people. I challenge you. Not only love some people, love yourself, understand how important you are, and understand how much I need you, and I'm thankful. And other than that, you guys are out there investing in real estate. You guys already know we wish you luck, and we hope you win. Thank you, guys.